Thanks for listening to The Professional Edge. My name's Todd, tax attorney, CPA, certified financial planner. And what we're talking about is plan today, enjoy tomorrow. Think about that for a second. We need to plan today to enjoy tomorrow. We know that we are all going to get to retirement age, or we are in retirement age, and are we making the most of our investments? Well, think about this for a second. We have to go clear back to 1998 in order to get two back-to-back 20+% returns in the S&P 500 index. 1998, yes. We had it here in 2023 and again in 2024. Well, we got a change in the administration. President Trump took office, and we are seeing the Band-Aid being ripped off with a lot of rhetoric being stated, and bills are being passed, executive orders are being made. So how is that going to affect your investment portfolio and your tax planning? Y'all got to remember that the high standard deduction and the one of the other tax attributes is the miscellaneous itemized deductions are not going to be available after 2025. That's when the sunset happens. And then in 2026, those all come back into existence unless Congress takes action. So how is that going to impact your estate plan? How is that going to impact your income tax planning? So that's why we plan today and do the what-if scenarios, and also what do we need to do to adjust your portfolio. A lot of our listeners here on the Professional Edge have CDs that they took out, which completely agree with part of your portfolio to lock in that 5% plus rate. Well, it's time to renew, and we're not even close to that 5% renewal rate. So what do we do with those assets that are coming due? Well, we look for rates of return that are reasonably safe. And one of those might be a low duration. That means the maturity date is not that far away, meaning under 5 years or less. And it might be a high yield or an investment grade corporate bond fund. That would definitely yield more than what a CD does. Yes, the principal is subject to fluctuation risk. But hey, we can also buy a bond, an individual issue, and therefore, if we hold that to maturity, then we don't have principal risk. We just have default risk. So again, if that's something you're evaluating an alternative to get a higher rate of return than what a CD renews, that low duration, high yield bond fund might be the opportunity for those funds, because it's a near cash equivalent. Most of these trade daily. If it's an ETF, it settles out immediately, trades like a stock. If it's a fund, then it closes out at the end of that trading day. So again, to have that discussion on, hey, am I too much in cash, or what is my cash equivalent alternative? Make that evaluation. Do give our office a call at 877-654-9798. That number again, 877-654-9798. So how else can we plan today to enjoy tomorrow? Well, let's say you're thinking about buying that second home to retire in, that condo somewhere. Well, we got to be sure that you can afford that second home and run the numbers and say, hey, it's not just going to be the mortgage payment that you're going to have to cover. It's also going to be your insurance, your taxes, repairs, maintenance, upkeep, maybe HOA association. And especially in Florida with these condos, we're having special assessments in the 6-figure level. So those are baked into the sales price. That you might get it less than fair market value, but you are subject to that special assessment. So be sure that you understand what that contract terms and conditions are if you're looking at that second home. And of course, most of our listeners here on the Professional Ed say, hey, you know what? I'm going to buy that second home or condo, and I'm going to rent it out, and it won't cost me anything. I'm probably going to make some money from doing all the rentals. Well, guess again, we've run some numbers. We've seen it. We do the tax returns for individuals along the Panhandle, even 30A, and it comes out near or less than break even on those properties, even if it's a $300,000 condo or it's a $1.2 million home. It just is not there because that rental season has gotten shorter because school starts earlier and lets out later. So think about that again. What is the actual number? And you got to be honest. So that's why we plan today. If you think that that property is going to make you money and you're going to have that extra money for your retirement income, got to probably think again, because what if it doesn't? Then how are you going to supplement your retirement income? Or if you have a very bad rental season, like some of my clients down along the Panhandle, then how are you going to cover those extra expenses or that special HOA assessment of $10,000 to $15,000, or let's not even think about it, the $100,000 special assessment? So that's why you plan today and say, okay, what is my game plan for acquiring that second home? Do I do it today? Do I wait until I get to retirement? Or do we want to rent a couple places, VRBO or Airbnb, and see exactly if that's what we see ourselves doing? In our retirement, go down and stay a month at the beach in which you think you're going to want to stay at, and see if that's your lifestyle. You'd be surprised. A lot of people say, after 2 weeks down there, I'm done. I'm ready to come home. I can't walk along the beach anymore. I can't play any more golf day after day after day. So that might not be the proper thing to do. So again, it's having that plan on planning today so you can enjoy tomorrow. So let's turn to your portfolio for a second. When was the last time you actually looked at your 401k allocation? Or do you just put it in there like blind mice and hopefully it grows? Now, what about that old 401k that you left an employer 5 years ago? Have you even looked at that? Well, a lot of people don't. They just forget it, and it's not been managed, not been allocated. It's just stuck there from what you left it at 5 years ago. So my challenge to you as a listener here on the Professional Edge, if you have that old 401k somewhere and you haven't taken a look at it, well, I would encourage you to do a self-directed IRA, roll that money over. Now your investment options have a lot more options available to you than underneath a 401k plan. That's number one. Number two, what you measure gets watched. So if you watch and measure what your IRA account is doing now, then you're going to be able to make different allocations based on different economic climates versus a set, forget, and don't do anything with it. Well, got to be proactive when you manage, not saying day trade, but things change. For example, the Fed had rates down to about 1% for forever, and then they went up to 5%, quickest rate increase in history. And now they've come off a little bit, and we're at 4.5% right there. President Trump is demanding that interest rates fall, or the Fed makes an adjustment. We'll see how they react to that. But the Fed currently has said we're going to wait and see to see what all these new presidential orders and executive decisions have on the impact on the economy and all this tariff talk. We're going to wait and see. So the president can demand that all day long, but the Fed is an independent party, so they can do as they choose. Now, the threat of being replaced as a Fed chairman, we all know that is a thing which comes up next year. But in the interim, rates are at 4.5%. So how is that going to impact your portfolio? Well, we all know as a listener here on the Professional Edge that if interest rates fall, bond prices go up. It's an inverse relationship. Think about that as a teeter-totter. And when interest rates rose, excuse me, we all know that bond values fell. Or if you weren't paying attention, then you didn't really understand that either. So if you get your statements and all they do is go on the pile and they never get opened anymore, it's time to probably engage a financial advisor to assist you to watch it, to correlate, to provide investment recommendations when they are necessary, not to generate a commission. And that's what we do at Estate Management Counselors. We help our clients, and the only thing we have to provide is counsel and advice. So We have a fiduciary duty to act in our client's best interest at all times. We don't get commissions when we trade those stocks and bonds and things like that. That is an adverse relationship, in my opinion. I'm going to sell you this so I can make money. That's what stockbrokers do. So let's not do that. Let's get a professional on your side, a coach, and plan today so you can enjoy tomorrow. If you want to start that conversation, give our office a call at 877-654-9798. That number again, 877-654-9798. Now, here's where you need to take an advantage of this opportunity on an inflation buster, right? We all know that eggs and milk and everything at the grocery store is far more expensive than what it was 2 years ago. So what have we done? To help our listeners here on the Professional Edge, we have put together to where you can get your estate plan done. Remember your New Year's resolution. You can have your income tax analysis performed, and any tax savings will be put forth to you in writing. And number 3, review of your portfolio. Do you hold the right investments in the right accounts? Are you over allocated to technology? Yes, that's been the runner for forever. But you know what? There's infrastructure that's going to change. There is drilling, as President Trump says, drill, baby, drill. Just repeating what he says. So there are different sectors which are going to benefit if this administration gets to implement some of their objectives. So with that in mind, get all 3 of those done and way to get that opportunity or that advantage, inflation priced. I mean, it definitely is a deal, is to go to EMC The Bundle. That is Echo Mary Charlie, thebundle.com. Look at that and get all 3 of those put together. So that's my challenge. If you were thinking or you had this New Year's resolution about A, you're going to get your estate plan done. B, you're going to plan your taxes. And C, you know what? I'm going to start paying attention to my investment and old 401k. I need to actually do something with. Well, start by visiting emcthebundle.com. That is Echo Mary Charlie, thebundle.com. My name's Todd, host here on the Professional Edge, tax attorney, CPA, and certified financial planner. I appreciate you listening in to the Professional Edge. And if you think some of these things could help one of your colleagues, send them a link to the podcast or tell them to tune in to the Professional Edge.
With today's financial markets, are you getting the personal and professional attention you and your money deserve? Clients of estate management counselors benefit from having one set of professionals advise them on their tax, estate planning, and investment advice. We call that the Professional Edge. Todd is a tax attorney, CPA, and certified financial planner. With over 15 years' experience, he welcomes the opportunity to assist you in preparing for retirement, implement effective tax planning strategies, and to help you properly plan your estate. His radio show, The Professional Edge, is aired weekly on Sundays at 9 a.m. If you're interested in meeting with call his office at 877-654-9798. That's 877-654-9798. Do you want to feel more confident about making the right investment, tax, and estate planning decisions? Today, these decisions are more complex than ever. Have you thought about working with a professional advisor and not sure who to turn to? Not sure what qualifies one to be an advisor? Todd is more than qualified as a tax attorney, CPA, and certified financial planner. Is with Estate Management Counselors. Estate Management Counselors operates as an independent fee-only investment advisory firm. They're dedicated to gaining a personal understanding of their clients' objectives and implementing professional counsel and advice to achieve those objectives. So take a second to talk with Todd to learn how you can benefit from their multidisciplinary practice where they coordinate their clients' legal, tax, and investment strategies into one comprehensive and integrated plan to enhance and protect their clients' financial security. You can reach Estate Management Counselors and speak with Todd by calling 1-877-654-9798. That's 1-877-654-9798.